Chevron will be reporting earnings on July 28 before market opens. Ticker symbol CVX. And today, July 26, we detected unusual options activity. And so in this video, we're going to go over and analyze these unusual options to determine whether Chevron will be going up or down for earnings. Because these options were done just very short term, August 4, okay? And there were 4,000 of them, okay? 12:04 p.m. today for the 165 strike calls and the 167.5 strike calls. So what does this mean? Let's take a look deeper. August 4, 9 days away. And when we take a look at the strike prices, you can see here the 165's volume here, and the 167 volume is also here. They're both at 4,000, greater than 4,000, which is all greater than the open interest. So we know that both of these options were opening trades. And based on our analysis, we believe they bought the 165 strike calls and sold the 167.5 strike calls. And when you analyze this trade, you can see that as the price of Chevron at 161 goes up, the profit also goes up. So this is a bullish trade. Positive 11 delta. Positive is bullish going long, and negative is bearish going short. So you can see here the profit loss here on the y-axis. Anything above this line is profit. Anything below it is a loss. And so this happens when Chevron goes down, it's a loss, but profitable when it goes up on the price, because price is on the x-axis here of this graph. Okay. Now, one other thing to point out, which is quite significant, is that when we take a look at the value of these trades, they paid $119 to buy it, and then they sold it for 57, the other strike price. So what is the total value of the trade? 119. Since they sold the 50s to get 57, or they sold this call and collected $57 of credit, we have to subtract that 57 from the initial debit of 119 to get $62 for this trade. Okay. Which is about this close to here. It's right now it's $53, so you can actually get it cheaper right now because of the price and the theta decay that has occurred. So the value of these options are now cheaper. Also, since they did 4,000 of these, let's take a look at the total value of this trade. $248,000, right? So this is like a very short-term earnings trade here. So why are they doing this? They must believe that Chevron could go up. Okay, and so we'll find out on earnings day in about 2 days, July 28th. And one thing to also point out is that because the value is 248, okay, in comparison to the other unusual options trades that we analyze, it is much less. And so the probability is not as high compared to the trades that we analyze, which usually go upwards to more than $1 million in value, because we want to take a look at large investors and what they're doing with their stock picks. And so if you're interested in the trades with more than $1 million on unusual options, I encourage you to join our membership. That's where we share exclusive videos on other stocks to diversify your portfolio, on stock picks that have a higher probability of being right because they're valued more than $1 million. Okay. Want to diversify portfolio as always because you want to reduce the risk, because we're not always right, but we are right the majority of the time. And the more you diversify, the more probability you have to be net positive in your gains. Okay. So that is the way we trade the market, our strategy, using unusual options activity to analyze where stock prices will be going, and then we develop option trade strategies. And if you're interested in that as well, we share that with our members. If you want to join, click the join button on our channel homepage to learn more. As usual, please smash that like button, subscribe if you haven't, and you'll be notified if you click the bell icon whenever we detect unusual options activity. Thank you, and good luck.